Growth stocks have been in free fall for the better part of a year, and I know that I have personally felt the pain. But whenever stocks are down, that can be a buying opportunity if you're an opportunistic investor. Here are 4 stocks that I bought in the last week. My name is Brian Feroldi. Thanks to stockcard.io for sponsoring today's video. All right, let's get into it. The first stock that I bought recently was Pinterest, ticker symbol PINS. Pinterest market cap has fallen all the way to about $16 billion because of the huge decline in its share price. Now, why did I add to my position in Pinterest? A few reasons. First off, this is still a founder-led company. I love investing in companies that have the founder at the helm. Pinterest is profitable and cash flow positive with a stellar balance sheet. And I love the fact that this company's market cap is relatively small at $16 billion. I think that this company's market cap could be 5 to 10 times bigger than where it is today within a decade or so. So I think that adding to my positions makes a whole lot of sense. Now, this is a stock that I already own. Brian Stoffel does not own it, and it scores very well on both of our investing checklists. And what's so fascinating about Pinterest is while the stock has been heading in reverse, Wall Street actually believes this company is still in growth mode. In fact, if you look at estimates over the next 4 years, Wall Street believes that this company's revenue growth is going to exceed 20% in each of the next 4 years. And again, this company is profitable, so the price to earnings ratio does have some merit. And if you look at Wall Street's estimates for profitability, the price to earnings ratio on a forward basis declines rapidly as the years progress. So this stock is very attractively priced on both a forward PE ratio and a forward price to sales ratio. Now, take those growth estimates with a huge grain of salt, but it does show you that Wall Street believes that this business is still in growth mode. All right, stock number 2 that I recently added to was Zoom Video Communications, ticker ZM. The company's market cap has fallen all the way to just about $37 billion today. Now, why buy Zoom? Well, you could pretty much carbon copy everything I just said about Pinterest. It's a founder-led company. The financial statements are absolutely stellar, and the stock has fallen so dramatically over the last year that I think it is primed for a rebound. Now, this is a stock that both Brian Stoffel and I currently own, and it scores unbelievably well on both of our investing checklists. And you might be wondering, is this growth story done? Well, yet again, Wall Street doesn't think so. If you look at the revenue estimates over the next couple of years, Wall Street still believes that this company is going to be putting up some pretty strong top-line growth numbers. And I actually think the estimates for 2023 and 2024 could actually be a little bit low. It wouldn't surprise me at all if this company could grow faster than 20% in the out years. Of course, yet again, these are estimates, so take them with a huge grain of salt, but it does show you that even Wall Street believes this company is not yet done growing. This is also a company that is highly profitable, and the price to earnings ratio is useful in this case. While it still doesn't look classically cheap at today's prices, the price to earnings ratio on a forward basis is expected to decline in the next couple of years. The same could be true of the price to sales ratio. Is going to reach very attractive rates if those revenue numbers can be hit and the price doesn't improve at all. So this is still a very strong business that is trading at a far more attractive price today than it ever has as a public company. The next company that I recently added to was Semler Scientific, ticker SMLR. This is a very tiny market cap company, market cap of just less than $500 million, and we've never done a deep dive on my channel before, so if that interests you, please let us know in the comment section below. However, Semler has so many of the attributes that I look for in a great business. It is growing quickly. I'll show you how quickly on the next slide. The financial statements are absolutely stellar, high margin, very profitable, stellar balance sheet, and the opportunity ahead of this company remains enormous. Now, this is a company that I have owned for a couple years. Yet again, Brian Stoffel does not, but it scores very well on my investing checklist, not as well as Brian Stoffel's checklist. One reason for that disparity is this company does have customer concentration issues, and Brian Stoffel's checklist punish that much more than mine does. But if you want to talk about opportunity, this company's top line is growing extremely quickly and is still expected to do so over the next couple of years. And yet again, I actually think these growth estimates could prove to be too conservative in time. And like Zoom and Pinterest, this company does have earnings and it is optimized for profitability. So the price to earnings ratio is useful. The price to earnings ratio, I think, is reasonable today given how high quality this company is. And the price on a forward price to sales ratio also looks very attractive to me. I was happy to add to my position given the recent weakness in the stock price. All right, the final company that I added to was Fiverr. This company's market cap has fallen all the way to just $2.6 billion. Now, we've highlighted Fiverr on the channel before, but as a quick reminder, this company is growing very quickly. It is still led by its founder, and the financial statements are extremely strong. This is a stock that I own. Brian Stoffel does not, but it scores very well on both of our investing checklists. Now, the threat on the horizon is that Microsoft LinkedIn is starting to get into this market, and that has been one reason, along with the general sell-off in growth stocks, that this stock has been under pressure. But even with that looming threat, Wall Street still believes that this company's revenue growth is going to remain quite high over the next couple of years. The website I pulled this data from does not have an estimate for 2022, but I believe the number is somewhere in the 25-ish% range and still expected to remain above 20% over the next couple of years. Now, unlike the other three companies that I've talked about, the price to earnings ratio for Fiverr does not work nearly as well. This company is not yet optimized for profitability. Therefore, take these price to earnings ratio numbers with a grain of sugar, not salt. The price to sales ratio, I think, is more appropriate here. And while the price to sales ratio is still high in absolute terms, given the company's expected growth rate, the valuation on a forward basis looks even more attractive today than it has at any time that I've been following this company. Hence why I recently decided to add to my position. So Pinterest, Semler, Zoom, Fiverr, what do all four of these businesses have in common? Well, if you've been watching my channel for any period of time, you may have noticed that they were all chosen by me in the Beat the Bryans contest that we have going on at stockcard.io. As a reminder, you can head on over to stockcard.io and build a 5-stock portfolio. And throughout the year 2022, we're going to be measuring to see who can create the best return on a 5-stock portfolio. And you're going to be competing against us. You're going to be competing against Brian and I to do so. Now, if you're just hearing about this contest today, you are really going to have a chance to join at an advantageous time because both Brian and I are off to absolutely horrendous starts, down more than 20% each from just the start of the year. So that's a heck of a head start you can get if you do start today. Now, we have had several hundred people join the contest, which is awesome, and many of them are in positive territory for the year, which is very impressive given that the indices in general are down. The leader right now is Vish with his 2022 portfolio, which is currently up more than 20%, several other portfolios above 10%, and many investors are well into the green. So we expect many people to absolutely crush our returns, which is what we love to see, because we look forward to looking at the stocks that they pick, studying them, and learn how we can be better investors ourselves. Now, if this is the first time you're hearing of the contest, we created a video where we talk about each of our 10 stock picks in detail and show you how to enter. So click the link that you see on your screen if you're interested in joining. Brian, out.